So we are at the 1st of November, coming in close, a bit late for the MTBPS, which usually is like first, second week in October, but Godongwana preparing a speech for 1 November. ETM Analytics did a scenario planning around what we could see come out of the figures and the data from this MTBPS. And to chat about it with me this morning is the head of research and director, George Glynos. George, thank you very much for joining me quickly. So, in our work and the research that you guys looked at, what is ETM's base case for what's going to come out on Wednesday?
So I think, Ilse Marie, we're looking for some disappointing adjustments to what was announced in the budget. We think that the budget deficit could be something closer to the 5.5% of GDP figure. That means that we're no longer running a primary budget surplus. It means that we are going to experience a debt trajectory that kicks up again at a slightly more accelerated pace. It means that the fiscus more generally is under greater pressure, that the government has to look at some austerity measures. And I actually hate the word austerity. Substitute the word austerity for reforms. And all of a sudden, I think it sounds a whole lot more palatable and is closer to what is actually needed than this word austerity. The word austerity, I think, gets a bad rap. Just because you are trying to live within your means, somehow it gets turned into a very bad thing just because governments can borrow. But I think it speaks to the need for reforms, and we need lots of reforms. This government is far too big for the size of the economy. Cabinet needs to be shrunk significantly. We need to start digitizing this economy a lot more to try and rid ourselves of some red tape and frictions that arise out of the normal course of doing business. I think SARS has done quite well with that, but there are lots of other avenues that we can improve on. I think we need to seriously look at the models of state-owned enterprises and look at including the private sector to a far greater extent than what we have. Whether any of this gets announced, Ilse Marie, is up for debate, because we know that the MTBPS is more of a feedback session than it is a policy implementation session. But these are the factors that are going to arise, and that I think Finance Minister Godongwana needs to touch on, alongside other concerns people have, like the social relief of distress grant that was included in as part of the social disbursement through COVID. We want to know if that's going to continue ad infinitum or not. Is it going to just be added onto the social grants that we currently pay, or not? Can you actually remove them? And is it politically palatable for the ANC to remove them ahead of next year's elections? But that's an extra 30 to 35 billion rand a year that gets spent on that. So, it's a lot of money for a country that's already running deep in budget deficits. And simply selling it as a necessary need kind of ignores the basic fact that we are not living within our means, and we are borrowing ourselves into a debt crisis. If we're not careful, that could accelerate in the coming years if we go through, a global downturn or recession.
Like you said, it's they might not make any announcements in the MTBPS concrete, but they may hint on the levers that they may be considering to plug what we're expecting is going to be a rather significant budget deficit. And we might be looking at borrowing ourselves out of the crisis, but all of a sudden in the public discourse we found a suggestion of the reserves bank's FX and gold reserves account, which stands at a very healthy 460 billion rand, as being this silver bullet to our fiscal crises. And what a terrible idea to tap into that.
Terrible idea. It looks like a lot of money in rand terms, when you adjust it. But these are reserves that we have painstakingly built up as a country over a long period of time. And countries do so because it adds an element of stability to your financial market system. If you believe that your central bank is a lender of last resort and is there as an institution to be able to supply dollar liquidity into a market when it needs it, you begin to realize that this actually is useful to have. It's important to have. It's a safety net that foreign investors look at, and they would far rather invest in a country that has foreign exchange reserves than a country that has none. We went down the road of utilizing those funds back in the 90s to try and defend speculation against the rand. That was a silly thing to do. We ran up a net open forward position of some 25 billion rand at the time, or $25 billion at the time. It was significant. We had to pay all of that back. And at the time, as memory serves me, it was quoted as a major issue to foreign investors. So we had to unwind it at the time, and simply sitting on neutral doesn't help much either. So we need to have those funds there. I understand that at a time when the country is under fiscal pressure, that these might look really enticing. But I would strongly guard against utilizing those reserves at all. They're there to serve a particular purpose and should be ring fenced and protected away from the clutches of undeserving politicians that don't deserve to be bailed out for a job poorly done. And that's, I think, what we are dealing with at the moment is that these politicians, ahead of an election next year, simply do not want to take as much accountability as they should be because it doesn't politically suit them. So we have a moral hazard here that arises out of tapping into reserves funds like that, because you never really get to the point of holding these wrongdoers accountable. And so, we need to find another solution. And the best solution is, instead of throwing good money after bad and bailing out and bailing out and bailing out, is find more sustainable solutions to fix our SOEs. And whether that be actual privatization or stealth privatization in the way that the government prefers to do it, where they don't necessarily sell assets, but do allow the private sector to play an increasingly important role in those industries. Either or, at this stage, I will take as a step in the right sort of direction. But absolutely, I'm dead against the idea of utilizing our reserves to do that. I think it's an awful precedent to set, and one that I believe at best plugs a hole for another 2 or 3 years. Unless you implement hard-hitting reforms, we're back to square one without the reserves and left that much more vulnerable at the end of it. So far, and the proof is there for everyone to see, this government has got an extremely poor track record at implementing hard-hitting reforms and deviating away from their ideologies that have led to this kind of statist approach at continuing to keep SOEs that shouldn't be afloat in any private sector environment would not be alive. And we've kept them alive purely because of this ideological position that the ANC government tends to hold, and it's been shown now to be unsustainable.
Y- You mentioned this now, and I think it's so important to highlight as well. And I think the government has run into a trust capital issue where they've just depleted the trust that any investor, business sector had in them, even though they've come out. We've seen the Ramaphosa administration since 2018 full of promises of reforms and social compacts. And yes, there were light points here and there, but none of them significant enough to have a wide scale impact and positive impact on the South African economy. And I'm concerned that National Treasury and Ramaphosa's administration has run into this space that when even they announce these reforms, even if Godongwana comes out swinging on Wednesday, calling for the reforms that everyone's been calling for the past 10 years, I'm inclined to think that people just might not believe them. And it's going to take them going over into action and to convince investors that, South Africa is the place to be at the moment, which, in light of all the geopolitical risks and everything else that's going on, we need something to convince people to come with their money back into South Africa.
Yeah, and Ilse Marie, I mean, it's for good reason that they're skeptical. We had a finance minister in Pravin Gordhan that essentially took South Africa from an investment grade, deep in investment grade. We were in the A's at one point. People tend to forget that. In
Mm.
'07, '08, '09, we were in the A investment category group, and we have simply slid year after year after year. And the message just never got through. And sadly, we still have that same individual running public enterprises And again and again and again, we see bailout after bailout after bailout. And at some point in time, one needs to ask the question, at what point do you say enough is enough? This ideological position is simply unsustainable. We need to move on. But that's where South Africa finds itself in at the moment. And so I think the skepticism is well founded. For example, we know that the government has approved the idea of having the ports managed by a private international company. We're still waiting for sign off. There's no particularly good reason why it's taking this long, but we're led to believe that that might only happen in March or April next year. Why it needs to take this long, no one really properly understands, other than a whole lot of bureaucratic red tape and regulatory constraints that just need to constantly be overcome. And I think that's sad. It's taken us an extremely long time to start liberalizing the electricity industry, and that too is disappointing, because look where it got us to in 2023 with the intensity of load shedding that we've had. Now we've got Transnet as a major constraint to economic growth, and it just seems that we are bungling from one SOE crisis to the next without the ability of holding anybody to account. And up until now, the government has been allowed to get away with it by virtue of the fact that the voting public has not held them accountable. And so, whilst these dynamics are at play, I think foreigners are quite justified in feeling skeptical about, whether these reforms are in fact going to be implemented to the degree and extent needed. And so we want proof. And I'm speaking on behalf of foreign investors now. We want proof. We are not going to sink billions of rands into a long-term project without some sense of the expectation, at least, that we have a government that is taking this seriously and would want to create an economic environment that's conducive to generating GDP growth and stability of things like property rights, as well as credibility of government policy going forward.
George, just before I let you go, we've spoke about the base case scenario. Is that it tends to be a little bit more positive than National Treasury's case. Why is it always that National Treasury seems a bit more optimistic about things like the budget deficit or growth forecasts compared to, for example, ETM's forecasts or scenarios?
I think it's just been a case where we've been more skeptical and cynical on their ability to generate GDP growth. Quite frankly, that's been the case now for many, many years. So we have often argued that far too often the GDP forecasts that are utilized are far too optimistic. There are effects that the government puts relative to the amount that it spends. The multiplier effects, for example, that they often refer to are actually negative rather than positive. In other words, more government spending gets you less GDP growth than actually doing nothing at all. Sometimes a government ineffectiveness can be a blessing in disguise. In South Africa's case, it sometimes is. But you could do so much better if you just stepped aside and let the private sector do what it does best. And that is, for starters, staying afloat and staying alive and being sustainable. That's what private sector companies do through the midst of all great levels of difficulty. When people have their own funds on the line, it makes the predicament quite different to when you've got knowledge that there's a public purse against which you can borrow and just plug hole after hole after hole. So these are the things that I think we need to get our head around. We need to start adopting meritocratic processes in order to do the things that we need to do and get government efficient. But until such time as I see it, we are going to hold a slightly pessimistic view on GDP growth, and I think that's borne out in the fact that our forecasts on budget deficits and whatnot have been a lot more accurate than National Treasuries or governments.
That's it. Well, we will be watching Godongwana in the unenviable seat and position on Wednesday, and perhaps we can have a chat afterwards just about, who knows, there might be some hints and very strong guidance and direction given on what measures at least National Treasury will be considering heading into the next financial year. So we might have a catch up after that. But George, thank you very much for your time.
Thank you, Ilse Marie. Good to chat to you.
For more of our analysis and some interesting conversations, check out our podcast, Reset the Frame.